Hello and welcome to our Made for YouTube series. I'm Sumaira Abidi, and today we are going to be talking about small cap funds. What is the allure over here? Are they meant for every kind of investor, or are they suitable for a few? And more importantly, can the small cap rally last? Joining in, we have Anupam Tiwari, who's a fund manager, equity at Axis Mutual Fund. Hi, Anupam. Thanks very much for joining in. And incidentally, Anupam also manages a small cap fund, so he's best placed to talk to us. So Anupam, first last year we have seen a large number of small cap funds, sort of create alpha. Out of the ones that created alpha, almost everyone has beaten the market. Some about 70% have beaten their benchmarks. So the first question that investors want to know is are these good times going to last?
Yeah, thank you, Sumaira. Good to see you again, and thanks for inviting us here again to talk to your investors. See, what we have seen in last 2 years or so is exceptional, right? These kind of returns are not sustainable. So, of course, I believe medium to long term good times will sustain, but I think year on year we need to significantly moderate our expectations.
Okay, that's good. The other thing that we want to know over here is because see, small cap funds are ultimately little high risk investments, right? So
Yes.
there is a little savvier investor who is investing in them. So I wanted to understand that a lot more funds have beaten the Nifty as opposed to beating their own benchmark. So which is a good way to judge a small cap fund's performance? Do you judge it against the market or against its own benchmark? And any other nuances that you can point out to us?
No, I think judging just with Nifty would be slightly unfair because small caps have a very different characteristics. So and you need to look at both the sides, right? Not just the return but also the volatility. So
Yeah.
I think small cap should be compared with broad small cap index in terms of or their own benchmarks, and large cap or let's say largest cap type portfolio should be benchmarked against Nifty. But of course, from a now investor has to also evolve that because benchmark can keep on moving here and there. And small cap investment is a lot about style, what type of risk, what type of volatility is expected or is fairly accepted by the fund manager or the investor. So one has to look at it very holistically and also start looking at a very serious level minimum range of returns that what you are comfortable, because beating just benchmark should not be the objective. Eventually wealth creation should be the objective. So if you
Hmm.
are generating with a reasonably accepted style of let's say risk or volatility a decent enough return, I think investors should also start giving due weightage to that factor also.
Okay, the other thing about small caps that we realize is that the acumen of the fund manager becomes very, very important, right? So if I look at the small cap universe, the largest small cap company, right, which is number 251 on the market cap list, is what SKF India. It has a market cap of just 16,000 crores. The largest small cap fund is 18,000 crores, right? So is there enough opportunity even for distinguished fund managers to find enough stocks to justify the increasing size of the small cap funds, right? I mean, for an investor, will it therefore become better to just pick direct stocks themselves because that universe is so limited anyway?
Okay. It's a great question and very tricky one, and I cannot answer for the largest fund manager. Wish him luck, and if they are doing it, I'm sure they would be confident of doing it properly. So, see, you have to look at holistically in a contextual environment, right? Generally, things are very contextual in life, so we have to appreciate that. One thing is that there are two types of issues in size, right? One is the absolute size. If there is an organic growth in absolute size, let's say you are running a 5,000 crore small cap fund and your NAV doubles, right? So suddenly you become a 10,000 crore fund.
Yes.
Now there is no problem because you are just sitting there and the size kept on growing. So that's a very normal organic growth. And because SEBI has been kind of wise enough to put a limit of 65% in terms of ensuring minimum small cap criteria and categorization, I think you can still manage it okay. The second problem that we face as a fund managers in the industry is the inflow part. Now, that is something which is slightly more tricky to manage as compared to just looking at absolute size. Because at times it becomes very difficult to manage if there are large inflows, irrespective of size, right? Whether you are running a 10,000 crore fund, a 5,000 crore fund, a 15,000 crore fund, if there are suddenly huge amount of inflows. So I think every MC in its own wisdom has evolved ways out of it in terms of putting restriction depending on the data that they are seeing, the kind and the size of inflows or the application. For example, we have a limit in terms of what is the size of application that you can put in. So everybody is managing in that environment, and it's not that it's a 365 days problem. At yes, in days it creates problem, but it's still manageable, and I'm sure in the industry everybody is managing in its own way. The second thing is in terms of opportunities. So opportunities are coming, right? You look at new IPOs. There are a lot of mid cap companies, small cap companies, and I believe in next 8 to 10 years, India is going to see plethora of small and mid cap IPOs coming in. So opportunity will keep on growing in terms of the investable universe. So from that side, I am not too much worried on it. We will have newer and interesting companies coming up. It also there is another factor, and which in fact is one of the my strong case for having a good small cap exposure for investors, is that India is changing its behavior in terms of risk appetite. If you look at investors and you go to them 10 years ago, if you would have gone to them 10 years ago, they would not have been very excited about equity per se, forget a small cap. In last 10 years, significant change has happened in the investor behavior. So availability of risk capital has increased. So this also encourages a lot of smaller companies to come and raise the capital from the market, because now they are seeing a favorable response. So it works both ways. When there is a lot of demand for companies and people are comfortable giving them equity or capital, companies will come. And when there are companies coming in, delivering, creating return wealth for investors, there would be investor who will keep on coming, and we will have good opportunity. So that's first part of answer to your question. And another thing in terms of whether somebody should take an individual call on stocks or should take through a mutual fund. I think there is only one criteria, and small caps are tricky. Large caps have a lot of history. It's more difficult to track and analyze and understand a small cap company rather than a large cap company. Because large cap companies have a very good coverage, analysts are covering them. They have a track record, history, data, management is, participates in a lot of conference calls, etc., etc. So you have much more data point and history to make your judgment. Whereas in a small cap, business is still evolving, and that is why they are more risky, because you don't know what would be the path of evolution of that business, next 3 5 7 years, and a lot of strengths are building in a large company. You know fairly well this is the strength, this is the weakness. In a small cap companies you don't know, right? So you have to be very very careful in analyzing that. So if an investor at individual level is very comfortable understanding that, taking that risk, then I think he is absolutely welcome to take a direct call in and investing in a stock. And if you can go through that volatility, the benefit that you get by investing in mutual fund is that you get a team of fairly skilled, experienced people to make that investment judgment for you. And also, in a portfolio approach, you may have a lower volatility. And most of the investors actually don't realize it, that psychologically volatility has more influence on your own investment decision as compared to returns. So that's the trade-off, right? You have to take, and it's a pretty individual call that how comfortable you are doing it yourself.
Okay. No, just for the record, I don't recommend direct equity at all. I wanted your take on it also because, there is more to investing in stocks than just the fundamentals of the company, right? I mean, the market has its own behavior, which somebody who tracks the market for a living, like fund managers do, would be better placed to sort of know. I mean, these are not some things which can be taught overnight to retail investors. So I take your point. Now, my question is that if the call is that yes, I will go with a mutual fund, uh, do is small cap a space which demands an active mutual fund, or could a passive strategy work? Because the fund manager's call being dynamic is so important to this space, would an active fund score over an ETF or an index fund?
Yeah, of course. I'm an active fund manager, and I believe it makes sense for anybody to invest in an active fund. See, in a small cap, as I told you, it's tricky to analyze companies. Right? It's difficult, and you are kind of betting on evolution of a company and its management, right? How it is going to deliver over 3, 4, 5, 7, 10 years of time. So you have to take a lot of qualitative calls and quantitative calls, which in a ETF you may not take because it's a bunch of decided stocks that you are taking. Maybe for a short period of time, if you want to bet on cycle, etc., you can take that bet. But if you really want to create decent wealth with controlled risk over, let's say, next 8 to 10 year period, I think active management makes sense. And I'm very proud of the fact that if you look at history of mutual fund industry in India, and you look at last 10 years, and you look at small cap category, not just our fund, but if you look at top 5, 7 fund houses and their fund, I think they have delivered a fantastic performance. So investors shouldn't have any reason to complain in terms of having any kind of unsatisfactory outcome from the active fund management side on the small cap, at least that much, because I keep on watching what my peers are doing, how they are performing, etc. So that's a very very clear thing that in a small cap space, I think still active makes a lot of sense.
Okay, so one final question then. Is that, if small cap funds are meant for higher risk investors, even for them, what is the kind of allocation that small caps would have in their portfolio? I mean, this is assuming that, even a mid cap fund would have some small cap allocation, a flexi cap fund will have some allocation. So, what is the place for a pure small cap fund?
Mhm. Yes, your question is very valid, and it all boils down to risk and the risk appetite of an investor. And risk is a very, very, exciting and very esoteric concept. How you define that risk. So, one is the volatility part. My strong belief is that if you have time in your hand, you should not be worried about volatility. Absolutely not. So, the only solid answer and solution to volatility risk is time. So if you can give 8, 10, 12, 15 years to a good decent performing small cap fund, I think you should not be worried about volatility, because eventually volatility will go down. The delivered volatility would be significantly lower. The second thing is in terms of your overall requirement of cash flows. Because small caps are a long duration product. You should not see them in a 2, 3 year time horizon. I would suggest in current scenario even 5 year. You should look at 5 year plus kind of time horizon. So if you are comfortable parting your money, whatever percentage it is in your portfolio for next 5 year plus, and you don't need to uh, fetch it for any emergency, etc., and you have a separate emergency fund, then of course you can take a decent enough exposure to small cap. So it's a question that has to be answered at individual investor level, but broadly the construct should be from only one perspective: is that time, how much time you have. The longer the time you have, you should allocate more and more to small caps. No, and the shorter time you have, you should allocate less and less. In fact, I would say less than 5 years, you should not even consider at least our product as of now. And that's the only thing. I think other than that, there is absolutely no problem. We are going to see a fantastic decade ahead. That's my firm belief in terms of small caps in India. So if you have a next 10, 12 year perspective, we are going to make very good, decent returns. And I always give this example of last 10 years. We have gone through so many problems. If you look at 2013, taper tantrum, demon, GST problem, slowdown in 1819, and then COVID. And you look at a small cap category average, it's very decent performance. And I think there is no reason to believe why we cannot repeat it in next 10 years.
Anupam, I can see a mural of Iron Man behind you. Is that the kind of resolve you need to be a small cap investor? Is that the understated message?
That's my son's wall on the room. So, but
No,
of course, you need to have
I'm just
appetite
kidding.
for appetite for volatility. Small caps are going to be volatile by nature, and they are everywhere in the world. It's not just India phenomena. If you look at US, the small cap index has significant more volatility than the frontline index. So, but that's the price you pay for making that decent enough return.
High risk, high reward, right? Anupam, I know I said last question, but just one more thing has come to mind, and I just wanted to understand how somebody like you, who's a career fund manager, looks at these things. The one issue with small caps is that suppose you as a fund manager identify a stock, right? Now, when you go to start buying, just because of the quantities that you need, to get that the weightage in your fund, you could end up driving up the stock price for yourself.
Correct.
Likewise, if you were to start offloading to exit a position, you could drive down the price for yourself just because, of the liquidity that is available in small cap stocks. How would somebody like you handle that? I mean, for everybody who's watching, just out of curiosity, wanted to know how is it done?
So basically, you learn to handle it as you go, as you kind of keep on facing situation. But and that's why I said it's tricky. It's not as easy as it sounds. But there are ways. So we have a very good team in terms of execution, etc. Dealers in our team who execute actually the trade, and we take care of it whenever we are buying a stock, and when we are selecting a stock, that is there a fair opportunity for us to accumulate size for us or not. That we keep in mind. Otherwise, we don't buy. And at times it happens that there are certain stocks which we have to sell, or they become a smaller part of our portfolio because we couldn't get enough quantity. So it's part of life, and we learn to manage it. And then during different market cycles, you get opportunity to own these good companies when somebody is getting into panic mode or selling, or somebody wants to restructure his portfolio, etc. And then new IPOs keep on coming where you have fairly decent enough liquidity. So yes, you are right, it's a challenge, and especially in Indian environment, and especially in a difficult market situation. Actually, it's a very, very counterintuitive. But in bad markets, when market has already fallen, liquidity dries up faster than in a bull market. So bull markets are more liquid rather than, and you really want to buy stocks in bad days, right? But and then there is no liquidity at all. So it's challenging, but with the team working with our other service providers who work for us in terms of offering blocks, etc. I think it is still manageable.
Anupam, thank you so much for joining in to talk about perhaps the trickiest category in the market, which is the small cap space. And more power to you for managing it and for doing a good job. So thank you very, very much for explaining it to us and our viewers.
Thank you, Sumaira. Thanks a lot, and thanks for the appreciation. Thank you.
Absolutely. So that's what we have on small cap funds for now. So the good times perhaps will continue, maybe not endlessly, but at least for the moment. But do remember that small cap funds are for high risk investors, and direct stocks, well, you need a higher risk than that as well. And be sure that you can do all the due diligence and hard work. Like Anupam pointed out, fund managers need a team. So if you're doing it on your own, you better be very, very sure of what you're doing. So thanks very much for watching. I hope this has been helpful. Stay safe.